Hello traders. This is Albert here, coming your way once again to share with you some vital information as we go about our trading journey here. So today I would like to share with you on how to pick bottoms in the market, and then make use of it to profit for much more profitable trades. So it's going to be an insightful time to give you some value in your trading career. So please give me your attention as I take you through how to pick bottoms in the markets. Thank you. So without wasting any time, I'll go straight into the charts. Then I'll show you how to pick bottoms in the market. So the first thing, we need some tools to do this. So the first thing that I will need is the charts, which is more price action. So what I'm doing here is more price action. So the first tool we need is the charts. Then I'm overlaying a 200 moving average on the charts. So this red line here is the 200 moving average. Then I'll also add the 20 moving average onto the chart. So with this is all that we need. That's all that we need for this explanation, to give you this information. So with this, what you look out for is a decline in the markets. You look out for a decline in the market. So after a decline and the market is about to turn around to go to the opposite side, what can you see to take advantage of it? So we're going to look at some high probability options or events that will help you to spot the opportunity to take advantage before the price runs off. So let's go right into it. So now we have here the 20 moving average, and then below it you can see price declining below it, and as it declines below the 20 moving average, you can see that price made several attempts to cross above the 20 moving average, which it fails. So normally the 20 moving average, it's a zone. As I always say, it's a zone. It's not just a skinny line as we see here. It's a zone. So with this zone area, that price keeps testing to cross above it. It tried several times. It could not succeed to cross and hold above it. So we're going to look at an opportunity where once price is able to cross above it, go through the 20 moving average and then hold above it, then you say, I think there's going to be a change here, there's going to be a turnaround here. So that is where we look for the opportunity to take the trade. So let's get right into it. So now once you have a decline in the market like this, the next thing you look out for is space between the 200 moving average and the 20 moving average. So as we can see here, we have space between the 200 moving average and the 20 moving average. So that is space number 1. So space number 2 is from the 20 moving average to where price is at the moment. So I'll circle that, and then that is our space number 2. Space number 2. So anytime you have this dual space, it is an ideal situation you have at your hand. It is an ideal condition that you want to see. But nevertheless, if you have only one, it could also work. It also have the same high probability. So over here we have 2 space between the 200 moving average and the 20 moving average in relation to where price is at the moment. So I'll just take this drawing off, then we'll go straight to the next thing I want to talk about. Okay, I think I need to pick the, so delete, right. So now what we want to see again is we've identified space between the 200 moving average and the 20 moving average in relation to where price is. So the next thing you want to look out for is price making its way up, crossing through the 20 moving average and being held above it, getting caught by the 20 moving average above it. So let me just play and see how it goes, and then we'll continue from there. So price has now crossed above the 20 moving average with this powerful bull candle. You can see it crossed above it, and then now it looks like the 20 moving average is holding on to price. So let me continue playing it, and then we see how price got held by the 20. So as we can see, price is being held here. Price has been caught by the 20, so it's being held, not being able to go below it. So when you see a situation like this, that is when you look for the next thing to happen. And the next thing to happen is when the last purple solid candle is taken out by the green candle, you strike in, you issue your entry, you put in your entry straight away without hesitation. So let me just play it forward. So on this particular candle, so before you do that, you can even just mark the highs of this candle. You can mark the top of this candle to know once it crosses, then you click, you take your position in the trade. Once it crosses above this last solid purple candle, this is the last solid purple candle. So once price takes this out, you are in. Then you put your stop loss below the halt. You put your stop loss below the halt. Then you wait for price to play out. Wait for price to play out. So let's continue with the play out and see what happened. Yeah, so now if you can decide where to take your profit, so the red moving average area could be your first take profit. This could be your first take profit, and the highs, the next high level from there could be your second take profit. So let's play out and see if these levels get hit. But we are not done yet. After you enter here, you could have a secondary opportunity to take another position when price comes back to the blue moving average, that's the 20 moving average, and it gets hold up again. You can look for another opportunity there to enter to go up. So let me continue to play this as we go through this example that we are looking at. So as we can see, price hits the first take profit, hits the second take profit, and then looks in at the moment looking very strong, moving up. So that is how to pick bottoms in the market. When you are trading, it doesn't matter which pair you are on. The moment these things like this happen, you can go ahead and then take the trade and see how it plays out. So as we can see, this is another opportunity where price has come back to the blue moving average. There's a high probability that it will not go through it. Yeah, it got held by the 20 moving average. So as it took out this last purple candle here, you could have entered another position to go up, and this is another area you could have entered another, added to your position, or taken a new trade if you had closed it here. So guys, this is how to pick bottoms in the forex markets when you have the opportunity to trade any pair. First of all, you look for a decline. You look for an elongated decline. Then you look out for space between the 200 moving average and the 20 moving average. And better still, if you even have another space between the 20 moving average and the price, where price got to, it's an added addition to what you can to make the trade a high probability trade. So you can do this on any time frame if you choose to. It doesn't have to be on this 2-minute time frame alone. You can look out for things like this happening on any time frame. So with that, let's just go to the 1 hour time frame and see if we can spot any opportunity there. As I have already explained what we look out for, what we expect, we could probably get something there. Yeah, so this is another good example, even though this looks to be in an upward trend after price has been in a trading range here. So it pulled down a bit, even though this moved down. It's an 1 hour. We are on the 1 hour time frame, so this is a long push down compared to the 2 minutes that I was on. This is a long push down. So after this long push down, price broke above the 20 moving average and got held up here. Price got held up here on this particular situation. So and then if you consider the space between the 20 moving average to the where price is coming from to where price got to is also quite wide. So those conditions is also fulfilled. And again, if we look at this in terms of the state of the market, it is in a narrow state. So we can take advantage of this as soon as price takes out this last purple candle we see here. Or we could use what is called the clearing bar. This bar here is clearing all these small candles that was printed here. So we could enter on this candle, this clearing bar here, for the move up, and then our stop loss right below it. So we could have entered this trade here, stop loss right here, and then the rest, as we can see, a lot of pips there, a lot of pips. So another opportunity to have entered this trade is here, stop loss down here, then another opportunity here, then stop loss is quite big. If you compare the risks to reward, risks on this particular entry would have been a little bit wider compared to this previous one we had, and then this one. So we have another opportunity here, and then risk is here, another opportunity here, risk is there. So guys, this is how you can take advantage of this to have a profitable trading career. You can find this in any market, in any symbol, all the time. So I believe you found value in this example that I've just shown you. If I should go on to maybe a lower time frame, we could look for another opportunity where what I've just shared with you played out there. Let's look for a decline in the markets that we can. So this was a decline. This is 30 minutes. This was a decline where there's a space here. So here we'll say we have one big space here after this decline. See how the space we have in between the price and the moving average is wide apart. So as price broke above or went through the 20 moving average, it got held up here for a bit, even though it poked below it. But as I said, the 20 moving average is not just this skinny line. It is a zone, it is an area. So we'll say all this is within the area of the 20 moving average. So price got held here a little bit and then pushed up. So on this candle, when the green candle took out the last solid purple candle, that is where you enter into this trade for a buy. You enter into this trade here for a buy and your stop loss below here. And then you can see what happened afterwards. Yeah. Let's see if we can find another one, another example. So going about it this way, you are kind of looking for a high probability, low risk entry. A high probability, low risk entry where you are not picking out the entry right from here, which is much riskier than doing it this way. So over here, this is on the 30-minute time frame. On the 30-minute time frame, we have something similar here, and where price got pushed up to this level and then dropped again. So there was a decline here, price got held up here. So on this time when the price was taken, the green candle took out the last solid purple candle or the red candle, as you may have it on your charts. That is where you enter here. Your stop loss there. So with this, you're keeping your losses small. So if you consider the risks you put in, you accepted and put in, compared to what you gain, it would have been 2 times or 3 times your risk, which is still a good opportunity. But we'll look out for a much more bigger opportunity where price turned around and then pushed further up. So guys, this is how to look out for a better entry when you want to pick out the bottoms on the charts, rather than just aiming for the lowest part of it, which could sometimes be very dangerous. So I believe you found value in this information that I shared with you. I believe this will help you as you put it, you take this information and make it yours, and then make use of it, apply it to your own trading strategy, or trading, how you trade, apply it, and then you see that this will be beneficial to you. So today, if you have found value in this information that I've shared with you, don't forget to subscribe. Just hit the subscribe button there, and then also click on the notification button, so that anytime I put on any new video, you get a notification. Thank you very much for being with me as I shared with you this vital piece of information to help you move to the next level in your trading career. Thank you very much, and see you on the other side.